Getting the job done requires a very vibrant private sector. This is Business 7. Welcome to the program in which we are going to focus on the slow uptake of credit to the private sector, and we're going to have a look at a new private sector initiative to better value adding in the beef industry in the country. Also, we're going to take a look at the business highlights in Africa in the past week. Please stay tuned.
Connection. It's in the human touch, the feeling of belonging. It inspires us and empowers us, creates clarity from complexity. It starts new conversations, unlocks the power of advice, and makes an impact on your life. At Alex Forbes, we pioneer insight to provide you with advice that connects your decisions of today to your impact tomorrow.
In a rather unusual move, the Bank of Namibia this past weekend issued a press statement in which Governor Johannes Gawaxab appealed to local commercial banks to increase credit provided to the private sector. Let's hear what he had to say.
We are not out of the woods yet. Our economy desperately needs appropriate stimulus, which can take the form of credit extension for productive purposes to fuel the economy. Our commercial banks and lending institutions should continue to lend responsibly to critical sectors of the economy to sustain the economic recovery we have seen over the past 8 months. Our fortunes and Namibia's prosperity are dependent on how we come together as a financial sector, business, labor and policymakers to reverse economic hardships, restore confidence, and revive ailing businesses.
While Namibia and its cities are seen as one of the cleanest countries in Africa, plastic pollution is a big problem. Therefore, it's up to each of us to do what we can to reduce the use of plastic, especially single-use plastic bags. At Liberty Life Namibia, we've taken the decision to turn all our old branding items into reusable shopping bags. It's a way in which we can drive sustainability and look after our most important stakeholder, our environment. If you also believe in sustainability and would like more information, please get in touch. Liberty Life Namibia. In it with you.
In reaction to Governor Johannes Gawaxab's appeal, we spoke to Economist Salomo Hei to get his impressions on what is going on.
What is the current situation with private sector credit extension in the country?
Well, thank you for having me and good morning to your viewers. So yes, I think generally there's been a bit of a subdued in terms of the performance of the private sector credit extension, both on the household and business side. Obviously, it was constrained by COVID and the general low economic environment or low economic activity that was prevailing. Since the rebound of economic activity, I don't want to call it a recovery, I call it a more economic rebound from the low base that we are coming from. We have seen a bit of an uptick in credit extended, right? But you would remember that the Bank of Namibia is, it's a cry for help. they have put out a 500 million facility with banks towards SMEs. And the performance of this facility has not been up to speed. It's been below par. And subsequently, they are reaching out to banks to say, what is the credit criteria in terms of trying to unlock a certain level of economic activity through a facility that sits with the commercial banks. Now, you would also be aware that there was, as part of the financial sector strategy, there was the credit guarantee scheme that was also put with the banks. In the context that it sits, I think, with the DBL, but some banks have signed up to use the facility. So essentially what this facility do, or the functionality of the facility is of such a nature that you as Joe Mary go for a loan application at one of the financial institutions. The business application is viable and feasible. The banks approves it. But because the credit criteria request that you should put down collateral. Now, in the absence of collateral, you then go to the facility to be able to raise the necessary collateral to mitigate any risk. Now, what has happened is that there's also been a very low uptake on the credit guarantee scheme, right? So these are two interventions that has come in, but unfortunately, it's not delivering in terms of the desired outcomes. So what you have is still you've got a 500 million facility that's sitting there, it's not being utilized. You've got a credit guarantee scheme that should mitigate the risk in terms of collateral, and yet the credit extended in terms of the productive side of the economy is very low. So what the Bank of Namibia governor then cry for help, if you will, was that a bank should come to the party to see to what extent they can look at obviously responsible lending, but at the same time look at on what basis can they potentially accelerate lending towards SMEs, lending towards businesses, lending towards the productive side of the economy. So essentially, it's within that context that you've got facilities that should unlock the necessary value. Unfortunately, they are not being utilized because the supply and demand side are not talking to each other. And subsequently, you have the subdued private sector credit extension.
In your opinion, what are the major factors subduing it from the demand side? Why aren't people applying for business loans?
Well, firstly, I think they could be applying, right? The application, obviously, in terms of the credit criteria, because I think there are very few businesses that are in good standing because of the current economic environment that we find ourselves in. But if you go further and analyze where the growth or where the uptick in private sector credit extension has been, is around advances, right? So generally, what does advances mean? Advances mean that I've got a small restaurant, right, that was closed for a considerable period of time. It's open now. I'm getting more feet in again. So what I do is then I go to the bank and tell the bank that, or ask the bank that, look, I've got patrons coming in again. Look at my past week sales that I had. I need to stock up, and then I go get an advance for a week or for a month. And as soon as I'm able to pay, as soon as I get the cash flow in, I'm then able to honor my advance obligation. Now, ideally, what you would want to see is facilities, right? Because of how the business cycle works. Sometimes you take 2 to 3 months to get going, and you would want a facility with a bank. Now, because of where we are coming from, and because of the lack of cash flow over that period, and because of the general low growth environment that we find ourselves in, facilities are hard to come by. So there is a certain level of applications that are going through, but obviously the credit criteria is not speaking to the times. So, and this is where we find ourselves.
So why are commercial banks so hesitant to provide credit to the private sector? Economist Salomo Hei explains why.
Well, I think the banks generally, and I think it's really an observation from my side, is that banks generally in the Namibian market are very risk averse. I mean, if you look at the ratio between borrowings and the deposits, you could see that it's massive. The amount of deposits that we have in the bank in relation to the borrowings, which are very low. So they don't really have a huge appetite for lending, right? That's the one thing. And there could be reasons why. One is obviously, I think, the regulatory regime obviously also put you on alert in terms of capital adequacy that you need to hold on your books at a certain point in time. The regulatory regime also puts you on alert in terms of the non-performing loans that you need to keep within a certain period of time. But I also think that one should understand it in the context of where we find ourselves. This is not a normal economic cycle that we find ourselves in, and subsequently, one would have expected some level of flexibility, because this is essentially what the Bank of Namibia is advocating for. And subsequently, one would have wanted the general banking environment to also follow suit. And so in terms of why the banks don't have appetite to, say, fund businesses, and to what extent they can become accommodative, I think that obviously there's been a general interest rate cut during COVID, right? And obviously that did have an impact on the margins of the banks, because remember that they are in the game of interest rate variation, interest rate margins as profits, right? So I'm sure that the uncertain period did put everyone on alert, and to the bank's credit, obviously they were concerned that the uncertain period did not have an end in sight at that point in time. So I'm sure at that point no one knew till when will the interest rate cut continues, right? So they sort of wanted to build buffers around that as well. That's why the whole COVID relief measures that were announced in terms of payment holidays for those in good standing. Again, it didn't make sense, because why would you give someone payment holiday while they're in good standing? You know, you would want to give someone who is in financial distress a payment holiday. And when you're in financial distress, technically you would not be in good standing, right? So those are some of the issues that one need to navigate around. But it's an open conversation that we need to have in the context that the banks really need to understand that where risk is mitigated, and especially mitigated with these credit guarantee schemes, and where there are facilities that are sitting there should be a certain level of flexibility with regard to making sure that lending can propel economic activity. And I think it's within that context where that bank should become accommodative. I mean, if the credit guarantee scheme quota is completely maxed out, it makes sense for the bank to maybe take a cautious approach and on the side of caution out of an abundance, right? Out of an abundance of caution. Now, in the current scenario, what we have is that there's been a very low uptake on the facility that's sitting there because of the credit criteria impediments. And then there's also been a low uptake on the credit guarantee scheme in terms of the security aspect of loans. So I think if you take those two scenarios, one would have wanted the bank to bring a certain level of flexibility and be accommodative in that respect.
Every day, you make choices that make you legendary. Journey together with us on the path to securing your legacy as a member of the League of Legends. With the Select Platinum Bundle Fee Premium Bank offering, you will access tools that will enable you to thrive. If you earn 850,000 Namibian dollars per annum or more, you can apply for this offering today via bankvinted.com.na for only 447 Namibian dollars per month. Bank Vinted, a member of Capricorn Group.
A new private sector initiative, Savanna Beef Processors, are making headlines and really shows what can be done when the private sector tackles the bull by the horns. We spoke to Romé Mostert. He is a director at Cirrus Capital.
Yeah, Savanna Beef Processors was an initiative of the Beef Value Chain Forum. Forum was formed when a number of beef producers were concerned about the industry and the exposure and vulnerability in the industry. And they've performed a number of studies to identify the potential that sits within the Namibian cattle industry and the importance of an export abattoir in that industry. And based on all that preparatory work, then in 2021, we assisted Beef Value Chain Forum to do a bankable business plan. And at the November 2021, the Beef Value Chain Forum members then said, listen, we must go and raise the capital for that business plan. So they basically approved it. And we then registered a public company called Savanna Beef Processors to raise the capital in. So beginning of this year, we registered the company, we opened bank accounts, and then went through the capital raising process. And as you just mentioned, with regards to the capital pool company, we followed much the same structure with Savanna Beef Processors, where we raise capital from producers. It's a private placement specifically aimed at registered cattle beef producers in Namibia, the beef producers registered to the meat board. And now that we've raised the capital and the money is in the bank, before we can spend it on building an abattoir, we must first finalize the calculations of this and then go back to our shareholder base and ask for permission. And then 75% of the shareholders need to approve the transaction before we can go ahead. If not, then we return the capital to them.
Romé, maybe a touchy question, but you guys aren't scared to be placed on the spot. Savanna Beef, isn't that an example of the private sector getting together and saying they can do a job better than government is doing through one of their institutions or bodies?
Yes, so we're very hesitant to say that the Savanna Beef will be competition to Meatco, for example. Firstly, there's two areas where the two companies can compete. One is in attracting livestock or throughput into the abattoir, so attracting cattle to slaughter. The second is in the market that you will be selling into. In both instances, if you look at the amount of weaners being live exported to South Africa every year, I think it's in excess of 200,000 weaners. And the objective of the Beef Value Chain Forum and Savanna Beef Processors is to ensure that we can retain about 50,000 of those animals in country, to add more value to them, and to ultimately sell them into markets where we get more value for them. Just something to keep in mind is that South Africa, because of its disease status, cannot export to the rest of the world. So when we export to South Africa, it's only to be slaughtered and consumed in South Africa. However, your European markets are much more lucrative than the South African market. And we have the ability to export to Europe. So that's the vision of Savannah, is to actually keep 50,000 cattle back, to add more value to them and realize ultimately more revenue from them in the export markets. So coming back to the competition question, as you can see, there's excess supply of cattle. If you pay them pay producers the right price, you will attract the cattle and it will be retained. And there's space for Savanna Meatco, and other abattoirs in the market. And if we look at the markets that we're selling into, we're literally a drop in the ocean. And there's most certainly place for all the abattoirs that can run in Namibia.
Romé, a final question. In terms of the brand Savanna Beef, what are your plans and when are you sort of targeting the start of exports?
Yes, so I think one of the frustrating processes that we have to go through now is the building and construction of the abattoir. Everyone would have liked to put the money in today and tomorrow we can start exporting, but that's not the reality. Reality is we need to finalize our planning now to go back to shareholders to get the approval to start construction. We're aiming for that for second quarter 2023. Then the construction process will probably be a 18-month process, which then tells us that we will be ready for slaughtering or first slaughter end of 2024. Then, because of the export certification process, so we cannot export to Europe if we do not have an export status. And in order to get the export status, both the buildings and the processes needs to be certified by the Directorate of Veterinary Services. So you first need to be in operation before you can get that certification. So then we have provided for a 12-month period whereby to get that to where we will be slaughtering at lower capacity as the profitability in the local market is not that significant. And after 12 months, then hopefully have the export status. So that puts us at the end of 2025 before we first export our cattle or beef. So that is a long period or long time frame in front of us. The rationale or the thinking is that we should have done this 2-3 years ago already. And if we don't do it now, then by 2025, we might regret it. So it's important that we make that move today. And I think the success of Savanna Beef Processors and the capital raised so far from producers speaks to exactly that point.
That's it for Business 7 for this week. We'll see you again next week. We're playing out with the business highlights in Africa over the past week as compiled by Reuters. Goodbye.
Here are 5 business stories making headlines in sub-Saharan Africa this week. West Africa-based solar energy provider PEG Africa has been bought by Bbox, the UK-based power company, said on Tuesday. The acquisition, for which the financials have not been disclosed, gives Bbox access to new markets in Senegal, Ivory Coast, Ghana and Mali. Also in energy, Nigeria will send more liquefied natural gas to Europe by next winter, its oil minister has said. While Europe is seeking alternatives to Russian gas, Temipre Silva said security issues are delaying deliveries at the moment. But he said Nigeria will build a new pipeline through Algeria to Europe at an estimated cost of more than $10 billion. More pipelines are also coming to several Central African countries after they agreed to set up an oil and gas network and hub infrastructures. Backers say the scheme, which would link 11 countries by 2030, will strengthen energy supply and reduce dependence on imports of refined products. The countries include Equatorial Guinea, Cameroon, Gabon, Chad, Angola, Democratic Republic of Congo, and Congo Republic. The World Bank's private investment arm, IFC, said on Thursday it plans to inject $160 million in equity into Safaricom Ethiopia. The deal is designed to help Safaricom Ethiopia, which began phased operations in August, fund its capital expenditure. And finally, South Africa, one of the world's biggest citrus exporters, has halted shipments of Valencia oranges to the European Union from areas affected by a fungal disease, the Citrus Growers Association said on Wednesday. The decision is a blow to the $1.73 billion sector, which has already been grappling with high costs for fuel, fertilizer and shipping.